Hey everyone, and welcome back to our series where we dive deep into India's top mutual funds. In this episode, we're shining a light on HDFC Focused 30 Fund, a scheme that promises smart diversification across market caps and sectors. It is an open-ended equity scheme investing in maximum 30 stocks in large cap, mid cap, and small cap category. Now, if you've missed our earlier videos, don't worry. You can explore those videos by clicking the info button. We've already covered mutual fund schemes from top AMCs like Motilal Oswal, Quant, DSP, HDFC AMC, and many more. In this video, we'll break down everything you need to know, including the fund's key details, investment strategy, market cap mix, top holdings, sector exposures, fund manager insights, investment structure, historical returns, performance indicators, and of course, the taxation structure. Dive right into it, starting with a quick introduction to who we are. We are PA Wealth, an investment services group that offers tailored solutions in stocks, PMS, mutual funds, alternative investment funds, insurance, startup investments, SME IPOs, bond markets, and even assists investors with Dubai real estate investments. We upload well-researched financial content every week. So don't forget to subscribe to our channel and hit that bell icon to stay updated with the latest financial trends and potential multi-bagger stocks. Alright. Let's start with the basic details of the HDFC Focused 30 Fund. Launched on the 1st of January 2013, this mutual fund scheme currently manages assets worth around 18,559 crore rupees. The investment objective? To generate long-term capital income by investing in equity and equity-related instruments of up to 30 companies. Now let's move on to the investment strategy. The HDFC Focused 30 Fund has flexible allocation across market cap segments. This helps in long-term strategic approach to reap the benefits of focused investing. Now let's explore the investment philosophy of HDFC AMC. This fund focuses on medium to long-term play to minimize inherent risks in the operating environment, born out of volatility in businesses and economies across the world. Investment philosophy for equity-oriented investments based on the conviction that stock prices reflect their intrinsic values over time. This fund focuses on medium to long-term investors, and investments are driven by fundamental research with a medium to long-term view. This fund managers believe that long-term fundamentals and effective diversification are key, and stock selection is critical in a constantly changing environment. Fund's core list consists more than 450 stocks, which are actively tracked with a coverage of over 85% of India's market capitalization. Let's now explore the portfolio mix by sector-wise holdings. In this fund's portfolio, large cap forms 64.8% of the total allocation. Mid cap account for 4.7%, small cap for 13.6%. The remaining 16.9% is held in cash and cash equivalents. Now, let's check out the top 10 holdings of this fund. The top holdings include HDFC Bank, ICICI Bank, Axis Bank, Kotak Mahindra Bank, Maruti Suzuki India Limited, SBI Life Insurance Company, Cipla Limited, HCL Technologies Limited, Bharti Airtel India Limited, and Piramal Pharma Limited. Moving on to the top 10 sector exposures. The fund is primarily exposed to the following sectors: banks, automobile, pharmaceuticals, IT software, insurance, telecom service, steel, quick service restaurant, auto ancillaries, air transport service. Let's now meet the fund managers of the scheme. First, we have Mr. Dhruv Muchhal. He has been managing the fund since the 22nd of June 2023. He is a chartered accountant and has done BCom from University of Mumbai. Mr. Dhruv Muchhal brings with him a broad experience in financial services. He has previously worked with Goldman Sachs, CRISIL Limited, and Motilal Oswal. Next up is Roshi Jain. She started managing this fund on the 13th of January 2022. She is responsible for investment in foreign securities research, identifying investment opportunities in capital goods, retail, textiles, and transportation sector. Now, let's take a look at the investment details. The minimum investment is 100 rupees for both lump sum and SIP. There's no lock-in period. However, in respect of each purchase or switch-in of units, an exit load of 1.00% is payable if units are redeemed or switched out within. No exit load is payable if units are redeemed or switched out after 1 year from the date of allotment. Let's move on to the returns generated. In the last 1 year, the fund has delivered return of 15.57%, while the benchmark have the return of just 6.37%. And, in 5 years, the fund generated the return of 32.15%, with benchmark providing return of 26.27%. Finally, let's discuss the taxability of earnings from this fund. Starting with capital gains. If you sell units after 1 year, gains up to 1.25 lakh rupees in a financial year are tax-free. Gains above 1.25 lakh rupees are taxed at 12.5%. If you sell units within 1 year, the entire gain is taxed at 20%. Now let's talk about dividend taxation. Dividends are added to the income of the investors and taxed according to their respective tax slabs. If an investor's dividend income exceeds Rs 5,000 in a financial year or 10,000 after the 1st of April 2025, the fund house also deducts a TDS of 10% before distributing the dividend. That's all for today. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got a mutual fund you want us to cover next? Drop it in the comments below. Thanks for watching and we'll see you in the next video.